Alright, in this video we'll be thinking a bit about tax. Now this is the tax information pulled from the government website, and it's telling us the different tax rates that apply to the income sitting in each of those ranges on the left. And the first thing to notice is that if you earn $18,200 or less, you don't pay tax at all, okay, which is a good thing. But if you move above that, you start to pay tax. Okay, now the common misconception is that when I move up a tax bracket, as we call it, that sometimes it can be a disadvantage because I'm suddenly paying more tax and so I'm actually worse off. Now that's never true, right? That's a misconception. Let's think about why. The 19 cents for each dollar, right, is really just a fancy way of saying 19%. It's a rate of 19%. Right? But you see the rest of that reads 19 cents for each dollar over 18,200. So what the tax is actually 19% of the stuff over $18,200, meaning the first 18,200 is still tax-free. And that's why you're never at a disadvantage when you move up a bracket, because the old rates or even the tax-free rate still applies to the first part of your income. Okay, so say what's the tax on $18,500? Well, you think of this as being made of two parts. The first $18,200 is still tax-free. You don't pay any tax on that. Okay, so what's left over? Well, you have $300 left over, and you pay 19% of that as tax, which is $57. Okay? So that's how we make sense of these things. Now, it changes a bit when we move to the next bracket. And the first thing you'll notice is that the rate goes higher. It goes from 19% to 32.5%. But again, this higher rate only applies to the bit over 37,000. So what happened to the first 37,000 then? Well, that actually is what the 3572 is doing. Right? That is the tax on the first $37,000. And let's see why. So we'll break that down. The first 18,200 is still going to be tax-free. You still pay nothing on that. So how much is left to tax then? Well, you take that away from 37,000 and you get 18,800 remaining. The rate on that is 19%. And so you multiply that by 19% and you get your 3572 being that number there. In practice, we never need to do the bit in green. That's why it's given to us in the table. Okay, so the first 37,000 is already taxed and the amount is 3572. And for the leftover bit, we take 32.5% of that if we are in that bracket. Okay, so let's see an example of this. What would be the tax we need to pay, sometimes called tax payable, on a taxable income of $85,000. Well, $85,000 does sit inside that bracket, so make sure of that first. See which range we belong to. So we are using that one that we've boxed there. So the blue bit says it's 32.5% of for each dollar over $37,000. And so what we should be asking is how much are we over $37,000? So we want to see the difference between our 85,000 and 37,000, which is 48,000. And from the table, we see that the tax we pay then is 32.5% of that, which is 15,600. But then we now have to add that, so we plus that to the 3572. And that gives us a total tax of 19,172. Okay. All right. So the other part of this tax stuff in our course is about tax deductions. The syllabus says this is to identify allowable tax deductions and to calculate taxable income after allowable deductions are taken from gross pay. Now there's a bit of trick here because the word deductions just means something is being reduced, right? But it could be used in two ways. Okay, so let's have a picture of what's going on first. First thing is gross pay. The gross income is how much you earn before anything is taken out. So it's not just tax that you lose money to. Maybe you're paying a mortgage. Maybe you got superannuation happening. So the gross income is before any of that is removed. How much do you earn? Okay. Now, you don't calculate tax on the gross income, right? Because there are these things called tax deductions that you can take out, right? You can actually subtract these from your income, right? And these things are anything you use for your job, really, all right? Or any donations that you make, all right? And so these would include things like travel costs or uniform or other work-related things. Maybe you're spending money on stationery or whatever. And you can't be taxed on these, okay, because you use them for your job. It wasn't for your personal use. It was stuff that you spent money on in order to work, right? And it's only fair that you don't get taxed on that stuff. And so you subtract that off your income to get what we call a taxable income, right? Now, the only significance of the taxable income is it's used to calculate tax and other tax-related things, okay? It's not how much you're earning. What you're earning is the gross income before anything's taken out, right? But this blue number is used to calculate tax. And so these tax deductions are a good thing because it means for the purpose of calculating tax, your income's lower, which means your tax is lower, okay? And so we use this taxable income to calculate the tax payable, and that's done using the table stuff we just saw, okay? And when you lump that together with other things you need to pay, like Medicare or your superannuation, or if you're paying off a loan, whatever it is, right? That's all the stuff that is being taken out of your pay. So if you subtract this whole lot from the gross income, then what you're going to get is how much you get to keep, which is called the net income. So the net income is how much you actually get in your pocket after all this is done, okay? And so the green tax deductions, they're a good thing because it means that your tax is being calculated on a smaller number, which means you're going to pay less tax. Okay? When people say they're doing their taxes, all right, every year when they're saying doing their taxes, all they mean is they're documenting and they're compiling all of those things they can make tax deductions on. Okay, and so the best way to do that really is to keep track of it throughout the year, and then just to add it all up at the end and submit that to the government to look at. Okay. Now the annoying thing is everything in red there is also sometimes called a deduction. Okay, we'll see that soon, right? And the reason for that is because it's being taken away from your gross income. So it's literally using the English word deduction in that way. But those are, I guess, bad things because your money's being reduced. Well, not bad, but, you know, it's reducing your income, right? It's going somewhere useful, but it's reducing your income. Whereas the green one is actually increasing your income, right? Because it's making your taxable income lower and therefore your tax is lower as well. Okay, so that's the two ways we use that word deductions. Okay, and got to be careful in terms of what the question's asking for. So I'm going to show you a couple of HSC questions now. So from 2015, this is a multiple choice question. It says someone's gross pay each week was that number, 952.25, and the following deductions are taken from her gross pay each week. There's tax, there's superannuation, there's union membership, and there's a health fund. What's her net pay each week? And so in this case, the word deductions is being used in terms of actually reducing her pay. Those things are being taken away from her pay, right? And so that's just subtracting them all, 626.07 then. Okay? And so the next one is where it's the green way of using that word. Okay? So this one says the table shows the tax stuff. Now, we'll always give you that table for tests and stuff like that. And someone's earning a gross salary of $84,000, and the tax deductions this time. The tax deductions are $1,000 for work-related travel, $500 for stationery, and the Medicare levy as well is 1.5% of her taxable income. Okay, and she's already paid $18,500 in tax. Often employers do take away money from your salary over the course of the year to just help you pay your tax ahead of time. And so she's already paid that much in tax. And the question is whether she will receive a tax refund or whether she'll be owing even more tax to the government at the end of that financial year. Okay. Now this time, tax deductions, if you look at it carefully, it says $1,000 for work-related travel and $500 for stationery. So this is stuff she must have spent on her job, right? Which means that these deductions are being used to calculate her taxable income. She won't be taxed on all the $84,000 she earns. The taxable income is that $84,000 minus those tax deductions, so $1,500, right, which is $82,500. It doesn't mean that she's only earning that much. It means that this number is used purely for the purpose of calculating tax and Medicare. Okay, so we'll use this number now to calculate tax, right? So 82,500 sits inside that fourth bracket there. And so that means we'll be looking at this row of the table. And the tax payable then will be, well, just follow the form on the table, 17,547 plus 37 cents for each dollar, so 37%, of what? Of everything over $80,000. So how far over $80,000 are we? Well, we're earning $82,500, so we are $2,500 over, and so that's what we take 37% of, $2,500. Calculated that, we get $18,472 of income tax. All right. But we also have this Medicare levy thing, so there's Medicare on this as well, which it says is calculated at 1.5% of her taxable income, the $82,500 thing, right? And so that equals $1,237.5 in total. Okay, and so the total tax she pays, including the income tax and the Medicare, is going to be those two numbers added together, which is $19,709.5. Okay. Now, if we wanted to calculate her net pay, we'd be taking that number away from $84,000. Okay, because the taxable income, again, is only used for the purpose of calculating tax. She's actually earning a gross income of $84,000. All right. But anyway, the question's not asking that. The question's asking whether she'll receive a refund or whether she'll be owing money. Well, she's only paid $18,500, but she's owing $19,709.5. So that means even after her prepayment, she's still owing. How much is she still owing? Well, the total was $19,709.5. She's already paid off $18,500, so we can take that off the amount owing. And when we subtract that, we get $1,209.5. And so that's how much she's still owing. Okay, that's all for today. Thanks for watching. See you later.